Okay, back again. So, time is 7:59 on the 21st of January 2021, and we're looking to trade the FTSE. So, open is just about to happen. So, we're looking for the price, as I said earlier, we're looking for the sweet spot, which is here. So, we're looking for price to rally up. We will sell it in or around this area, and we're looking to take profits back down here. Let's see what happens. So this is our profit zone. Bear with. Hello? Hello, yeah, I'm indoors. Yeah. Okay, no problem. See you in a bit. So, the open, 8 o'clock, and here we go. We're going to put this in at £10 a point. And get ready to place the deal. Bring that over here. So this is the minute candle. Here we're on a minute time frame. This is a minute candle. I use the minutes as a guide. So we've opened up here, we've gone up, we've closed, and we've now breached that high. If we breach the low, then we will sell and put the stop above the 1 minute candle. If we can get up to here, even better. The risk reward is better. So first minute candle done and dusted, and this is our range. And measuring tool. So I would expect that first minute candle, once it breaks below, to go to at least there, which is more or less our target. So we're coming in. Okay, I'm selling this. And I think we need to sell this. So our entry price was 6773 here. Our target price is down here, 6740. Well, between 47 and 42. So I'm going to put my stop just above here once we close below the first minute candle. Okay, so we have a 9-point stop to a 26-point gain. Apologies. So let's just scroll this all down. So we've got a 2.6 to 1 ratio. Right here. So it's differing about. So let's go to the 5-minute candle and we'll look at it on the 5-minute candle, see what the difference is. So same again. We can use the 5-minute candle. This is more conservative. So you can take the 5-minute candle, and when it breaks below, you can sell with your stop just above, like we've done. But that's a more conservative, risk-free trade. I've been quite aggressive, and I took it on the minute candle. But that is another strategy. So once it breaks below the 5-minute candle, sell the market, but then you're selling at 63 versus we sold at 73. So it's a 10-point difference. So that cuts your ratio down to 1.6 to 1, which is not as good. So anyway, I'm more of an aggressive trader, so I've gone for the aggressive trade. So the reasons why we wait for it to go up. Now, why do we wait for it to go up? Because what happens is the 8 o'clock open, you get a lot of retail traders. So the retail traders tend to fly in as soon as the market opens and just throw their cash onto stocks and shares. Yeah, so they're eager, they're no patience, they've not. Well, they might have a system, but it tends to be the first 5 minutes is retail traders. After the first 5 minutes has settled down, you get the professional traders come in and take over. So what we tend to do is we've got our key bit of evidence down here that the market will go down here. So we'll let the retail traders come in, throw their cash on, and once we see it's coming up to a good sell zone, which it more or less did, it was only 10 pips, no, not even 10 pips off. What was it here? 81, 85, 4 pips off. So it was only 4 pips off target. We let the retail traders come in and we take advantage of their cash situation. So they've come in, and now the big boys should come in and start selling it down to our target area. Okay, so differing about, and it's putting a nice little red candle there. Hopefully, no, it's pulling back now. Hopefully this is going to come down, and we are still within the first 5-minute candle. So I was saying to you that the safer bet is to sell the low, but this is more risky. So this is the first 5-minute candle bar, here to here. We took the more risky stance of getting in on the 1-minute time frame. But here we go. Oh, look, nearly. There we go. It's just broken below. Just broken below now. So your safe bet would be to sell it, but the risk-reward ratio doesn't work out. I'll tell you why, because we've got 63 to 82, so it's a 20-point So your stop would need to be 20 points, from 63 to 43 would be 20 points. It's a 1-to-1 trade. In my book, a 1-to-1 trade is very risky, and I wouldn't like to do that. The reason being, if you have a 2-to-1 ratio on all your setups, you can be 50% right and 50% wrong, and you're still going to double your money, because it's 2-to-1. So for every one you win, you're gaining. If you put $1,000 on and you win one, you're getting 2,000 back. If you lose one, you're losing 1,000. So the ratio, you can lose 10 and you'll be 20,000 up. You can win 10, sorry, and you'll be 20,000 up, and you can lose 10 on the trot and only be losing 10,000. So you can be a 50-50 win to lose ratio and still make money, still double your money. So anyway, let's go back to this is a 5-minute chart. So we broke below, we closed below. That is a good sign for me, and we've just had a little bounce back to the 5-minute range, and hopefully that should roll over now. You never know. Back on the 1-minute time frame. So we've broken, come back. Let's have a look at Elliott wave. So we got the open, we got a 1, A, B, C, 2, and this is the 3. So I would expect another A, B, C. So Elliott wave terms, you've got a 1, A, B, C, which counts as a 2, and then you've got your 3 wave down. Then you've got an A, B, C. That'll be your wave 4, and then a drop for wave 5 into the profit zone, if you was to look at Elliott wave terms. But you never know. This is the markets, they can do whatever they want. So let's just wait and see. I'm going to pause the video and wait for it to move our way. Just looking at this in terms of Elliott wave, if this is an A, B, C, 1. No, so this will be your open is here. So it opens up, and then you've got 1, A, B, C, back up, 2, 3. If price closes above here, then that wave is finished, and it was miscounted, because wave 4 shouldn't retrace or close, I say close, below wave 2. So it'll be interesting to see what happens here. I can't see anything on this. It's a little bit clearer. So Elliott wave terms, it can't close above here. So So that is how I tend to map it. So if we was to get a point to point, we have a wave 1, wave 2, wave 3, wave 4, and a wave 5. So that's your 5-wave structure. 1, 2, 3, 4, 5. Wave 3 can never be the smallest. So if we take that to that and we move this, as you can see, it's bigger than that one. Not as big as that one. Wave 3 can also be a different structure. So it could be, this could be one of 3. So it could be 1, 2, 3, 4, 5, and that would make one big 3, and then you'll go up for 4 and one more down. But anyway, that's how I would map out the Elliott wave structure. See what happens, and I'll just hide the drawings. $51. Our target is 47 to 43. So yeah, so 40 is the sweet spot. And we're looking at the RSI here, we're now diverging. So you can see the open, and we spiked up to nearly 90. And then we've sold off, but now we're at 20. And we've got a low here, a low there, and we've got a lower low. It's not higher, so that's okay actually. It looked like a divergence at a quick glance. So here we go. So we've hit the target there of 47, and I'm just going to go off screen and get my ticket. Okay, so here we are, and 59 minutes, 58 minutes, and the trade is done. We're into our target. I'm now going to take the trade off. Bear with me. Okay, so that's my trade finished at 44. So we got in here at 73. We got off at 44. It's a 30-point loss. So we had a 9-point stop loss to a 30-point gain profit. That is 33 to 1. It's a nice 3 to 1 trade again. So I can be wrong if I'm getting 3 to 1 trades in. I can be wrong 3 times and still break even. So yeah, that's what we do. That's how we're trading it. It doesn't happen like this every day, but we're looking for the cream trades. We're looking for the best trades with the best profit with the lowest risk, and that is what we do. So I've been shown the money. Show me the money, and thank you very much. See you again soon.